Hey traders, welcome to Charts and Coffee. Hope everyone's having a good morning. I'm starting off the morning with a couple things on the screen here, and it's the economic calendar. There is one thing that matters for the next 2 days, and that is Powell. At 10 a.m., Powell is going to have day one of 2 days of testimony. This is semi-annual testimony. I think they used to call it the Humphrey Hawkins testimony. Now they just call it Senate Banking Committee, whatever. At 10 o'clock, Powell is going to read a statement, which, by the way, is going to be simultaneously released on the Federal Reserve's website. So the initial reaction this morning on the charts is going to be based on Powell's statement. And then the fireworks begin. We're going to have all the questions that are going to be, he's going to be peppered with questions probably through lunchtime, right? And anything he says that makes it sound like the Federal Reserve is ready to cut rates will send the markets higher. And anything that sounds like, nah, they got to wait, they're not happy about inflation, headwinds, whatever, that's going to send the equities down. That's it. Now, when he's done, we're gonna pull out a measuring stick. And yes, there is a measuring stick for Powell. It's called the Fed Fund Futures. Now, the Chicago Mercantile Exchange has made this really easy to understand because you're thinking, Rog, how do I pull up Fed Fund Futures? What the heck are they? Don't worry about it. The CME has taken all that and distilled it into what each one of those contracts, the March contract for Fed Fund Futures, the May contract for Fed Fund Futures, they've distilled it to this. If you go Google CME Fed Watch, you'll get this link, easy peasy. It's a free link from the CME. This is macroeconomics, period. All right. What is Powell going to do? We are in the midst of expecting a dovish pivot. Are we going to get a rate cut in March? Probably not. Are we going to get a rate cut in May? Again, this is the pre-market view of this. Probably not, right? 79%. We're going to hold, 20% we're going to cut. It's June that gets interesting because June has almost a 59% expectation that Powell's going to cut and a 13.5% expectation that they cut in May and they're going to cut again in June. So you can see how low that probability, that possibility is. There is still a nagging 27% that they could hold in June too. If the equity markets are going to go higher, that column that's the tallest here for the June contract, for the June meeting, has to get taller. This quarter point cut has to increase from about 59% to something higher. That will be what the equity markets need to see follow through to the upside. And why am I talking about follow through to the upside? Yeah, Rog, aren't you ever bearish? Very rarely am I bearish for a prolonged period of time. Right now is not the time to be bearish. There are two things we have to look at. In fact, I talked about the three big themes for 2024 in this week of Top Tier Outlook. So if you're a Sector Secrets Mastery member or a subscriber to Top Tier Outlook, check that out and you'll see what the three big themes are. But two of them are really tendencies for a year that we're going to have elections, bullish, and for a dovish pivot, bullish. So if I were to say Jerome is not going to cut, that's just me talking. That has nothing to do with the data. That has nothing to do with the rate of change of inflation, jobs, or the target rate probabilities either. So I want to do less of what I think and more of what I see. And what I see is just another way of saying, what's the data say, right? And that's what we're going to be watching this morning. And in between all that, maybe there might be some day trades. I'll be in the Sector Secrets Mastery this morning, and I actually have I'll be covering the morning in the Central room, Simpler Central. So if you're in that room, I'll be there this morning. It's not usually how I'm scheduled, but today I'll be in there. We'll talk about day trading and we'll talk about the macroeconomic impact. So please check this link out. Please. It will distill macro, the only thing that matters, which is what is Powell saying and ultimately what does that map to they're going to be doing. All right. So that's the first place you want to start, the economic calendar and what really is moving price action today. The second thing is this quirky little jolts. So while Powell is reading his prepared statement, which again will be available on the Federal Reserve's website. I think it's federalreserve.gov or federalreserve. Something. I don't read it. I just want to watch price. I want to see how price is reacting to it. And so while he's reading that, and sometimes he's on time, sometimes he's not, at 10 a.m., we're going to get the JOLTS number. JOLTS is the second biggest jobs number, second to non-farm, which, oh, by the way, we get on Friday. So we have a lot of macroeconomic stuff going on. Now, yesterday, if Powell was not speaking today, there is and was a ton of things that I wanted to do. And the reason I won't do them is not because my daily price movement ranges were wrong. So far this morning, they're very right. The problem is any trade that I would have taken last night, I really should exit in terms of taking profit or scaling out, moving to break even as Powell begins speaking. We also know as soon as he begins speaking, we could see a tremendous drop. So in my mind, it made sense to hit the pause button. There'll be more trades coming. It's like a train. There'll be another one at the station. And if Powell creates the movement lower, that's when those swing trades, those overnight exposure, trend following, preferably trades will trigger. But, I wake up this morning and say to myself, Rag, if you were a hermit in a cave, which sometimes would behoove us to do, if you were ignorant of all these events happening, would you have taken the long position in the NASDAQ, the S&P, and a number of stocks? Yeah, probably, right? But I also know that we could shave 100 NASDAQ points like that. We could shave 25, 50, 60 S&P points in the blink of an eye. So since we do have knowledge of what's happening on the calendar, we just ask ourselves, well, what would it cost me if I was wrong? Not what would it cost me if I was right? But this is a gorgeous example of the daily price movement ranges, even on a day like yesterday, that looked like absolute hell-breaking loose, right? Where it sunk into the volatility range. And now it's, gosh, that's actually a really nice trade. I'm gonna kick myself maybe a little bit for not buying some SPY and QQQ calls yesterday and liquidating them on the open. But I at least want to show you this setup, and at least want to show you, what goes on in our mind to say, well, this could work and I could make some money, or this could be really bad and I could wake up to a gap down. We don't know. So we always make decisions based on, at least I do, right? I always make decisions based on what is this going to cost me if I'm wrong, right? Could it be an outsized amount of risk? That's it, right? So let's jump into the questions and get to it. Pierre is asking about CRM. CRM is actually one of the good yes stocks. Yes, meaning there's cup of nope stocks and there's yes stocks. This is one of the trends. However, what we want to remember is this is a great example of when sort of this pre-Powell action could create greater volatility. Here's a great cue for those of you that are in the Sector Secrets Mastery using the trial DPMRs for this month. We usually don't make these things available as a trial. We did, obviously, I've been letting y'all know we had that trial that began earlier last month. Take a peek, see when the gold crosses the gray. Now we're wandering into higher than the 68% probability of response. What happens there? Rag, what happens when we go back or go through 68%? I call it rare air. Now we're in the zone of unpredictability. There's something that happens 68% of the time, 2/3 of the time, and there's those events that happen 1/3 of the time. I don't want to be relying on managing risk and looking at predictability when we're in that 1/3, right? In that 1/3 window. So I wanted to show you things that we could have done and things that I chose not to do. But look, let's face it, the indicators were spot on, right? The indicators were spot on. But I do want to mention, if I did buy SPY, I would have had to have taken heat, unrealized loss, throughout the zone of the daily price movement range. So for those of you that have the daily price movement range, you say, Rag, I'm not quite as conservative a trader as you are. How would I manage a position like that? How would I decide that in front of Powell, I want to use these daily price movement ranges and get in? Use the more conservative edge, because what that'll do is give you some staying power through the trough. Okay. So I'd like to share with you all, things we're doing and things we chose not to do. We still have some open positions that expire March 15. We still have some open positions that we've taken well before Powell. And these are trend following buys. We also got into Uber and got out of Uber, scaled out yesterday, but we still have a piece of Uber open at the open, right? Because XLI has GE, which we have a position in, CAT, and Uber, which we have a position in, that are three of the best examples of strength in that strong sector. That's index sector stock alignment. How do we do that? Well, if you're in the mastery, you know, because you've gotten very comfortable, very familiar with what looks busy at first, but it really does distill where the relative performance is at. Anyone here can look at this chart, may not need to know what the colors are, but green is pretty universal, right? Things should be traffic light simple. What is the sector itself doing? It is going higher. It's green momentum, green trend. What are the individual stocks doing? GE, CAT, and Uber, your top three stocks in this sector. They're all moving higher too. What do I want to avoid? No Boeing, no RTX, no Honeywell, no UPS, right? No Deere, no Archer Daniel. Those are not green. And if you can get to that point where you're comfortable enough to whittle away from things you don't want to trade, right? And focus on the direction. In other words, I'm not picking a top here, right? The trade wasn't let's short yesterday in terms of the daily time frame trend. The trade is where can we buy? Now, if you're day trading, that's a whole other thing, right? So I hope this makes sense. This is where we are. This is what we're doing. This is what's going to map to the decisions we make in this environment. The other thing I want to mention is this has been a great year. And I say that not to be salt in a wound at all. Everybody loves, I say everybody, almost everybody loves a trend, right? I mean, we know we make, our trades make more money in a trend, in an uptrend specifically. This year has been an uptrend. So if you're waiting for something, please stop waiting, right? We have strength in, and by the way, I think in yesterday's free video, I talked about which sectors, which indices, and even touched on some of the stocks. And we got into a lot more detail on that in the premium video as to where we want to be buying. Because this is not a buy everything market. This is not a buy Apple market. My gosh, I've been warning everyone about please don't get bullish Apple because it's not doing the things that a strong stock, following a strong sector, following a strong index should do. Don't go bargain hunting. We're not pirates. We don't need to go treasure hunting. A lot of traders think we need to go find that magical stock. We need to go find that stock that's bottoming out. That's not trading. It doesn't have to be, right? Avoid the Apples of the world. Avoid things that are not in sync. And you'll be fine when you map it out, right? When you map it out and take that process at scale. Because when I hear people saying, Rag, I'm not seeing the account growth that you are in the Sector Secrets room. What gives? Because you're still waiting for things that are either things we think, or you're listening to someone on television. That's the worst thing you can do. And say, look, what's heading higher and how do I hitch a ride on that move higher? I hope that helps because it really does make me sad that traders are not able to benefit so far through 2 very, very good months to kick off this year. All right, so CRM, I'm going to tap the brakes on, Pierre. I need an inside day. I need a minor low. I need to see the daily price movement ranges realign and give me another setup. So things like CRM are a great example as to why going in front of Powell, it makes sense to be a little bit more prudent. Yes? All right, thank you for the question. Thank you. What could Powell say in SPI language that would be bearish? It's not me predicting what he's going to say. It's me, as I mentioned, reacting to, measuring what he's going to say. Anything that sounds like they're going to cut rates sooner is bullish. Dovish is bullish. I know, all these animals. Dovish is bullish. That's really it. And then watch the way price reacts. Watch the way those target rate probabilities react. All right, Eddie asks, I'm trying to understand the difference between S&P and SPX. Oh, gosh. You ready, Eddie? Everyone grab your pencil. It's really, really complicated. It's a very nuanced discussion. They're the same thing. SPX has been around for a really long time. And like, when I was in middle school, parachute pants were a really popular thing to have. Everybody wanted parachute pants. Then, think about every trend. Sometimes stocks are going to benefit from being the popular kid in class. They're going to be the popular thing to do. ES, SPX, MES, which is the micro S&P, SPY, they're all the same thing. It is primarily the tech, financials, and healthcare sector with a little bit of energy down near the bottom. So it's those four sectors and the stocks that are weighted heavily within those sectors. They're the same thing. Now, the nature of the SPX is different than the nature of the SPY, but it doesn't make them different markets. They're the same thing. Right now, everyone's obsessed with the SPX. Would it shock anybody to know I don't trade SPX because I have SPY? I have S&P futures, which are beautifully leveraged. I love trading them. So, however, whichever flavor, we call it choose your own adventure, whichever way you want to go with this idea you have an ES, let me recommend one thing. The only one of those three, SPX, SPY, and ES, that trades nearly 24 hours a day is the ES. When I watch the ES, my indicators have the ability to continue to crunch through volume and volatility and time and price almost all day long. SPY does not, and SPX does not, right? That doesn't mean I don't want to trade those. It simply means that when there is a setup on the ES futures, that nice, very fluid, continual contract reflecting the opinion of S&P, I can take that idea and go to SPY. I can take that idea and go to the micro S&P. I can take that idea and go to the SPX. But this notion that I have to watch the SPX it's an opinion, but I would respectfully say it's wrong. It's one choice, right? So when you think about the S&P, let me put it here in the notes, right? When you think about the S&P, what are you really looking at? Well, the alternatives are the S&P is the 23-hour version of this contract. The alternatives are SPY. Well, actually, I'll put in the MES, SPY, and of course, that beloved SPX. Although I don't trade SPX, and you don't really have to. Just find a version that you like and can control risk on. Then it's also tech, financials, healthcare, and a little bit further down the line, energy. Then that means furthermore, it's Apple, it's Microsoft, it's NVIDIA. That's the top three in XLK. Then it's Berkshire Hathaway, JP Morgan, Bank of America, right? That's XLF. Then it's Lilly. Really, right now, Lilly is the big player, Johnson & Johnson, United Health, right? Those are your top three in healthcare. And then lastly, way down the line, is Exxon, and it's Chevron, which also means it's a little bit of crude oil. Energy tends to move with crude. That's the S&P. Now, whether you want to trade it SPX, SPY, MES, whatever version that's liquid of the S&P you want to, that's what it is, right? Those are the ingredients. That's the way you look at it. I don't want to get into what's an index versus cash versus the ETF. You don't have to, right? You really don't have to. Make it simple. What is it really? If this were a cookie, let's talk about muffins. It is morning time. What would the ingredients be? These are the ingredients. All right. These are the ingredients. By the way, if any of this resonates with you, if you're thinking, Rog, I'm not having a good couple of months. I haven't grown my account in the last 2 months. What am I doing wrong? It's probably what you're trading, not how you're trading it, right? What you're trading. Are you focused on the best alignment of index sector stock? That is what we do each and every day in the Sector Secrets Mastery. Frankly, I know of no other more scalable and predictable way to do it. Find the alignment, you'll find the follow through, right? And just like that, the 20 minutes flew by. Wowza. Oh my gosh. So anyway, I hope that is helpful. Powell is going to dictate everything this morning. I showed you a little bit about the awesomeness of daily price movement range, but the risk of the calendar knowing 2 major events are coming up, Powell and then non-farm on Friday. And we think about risk over reward. We don't think about how much can we make. We think about how much can we lose if we're wrong. And let that be your guide. And then play out the probabilities. There have been plenty of trades the last 2 months. It's okay to be on the sidelines, gang. Flat is a position. And just like that, I got to go. I'll see y'all tomorrow, same time, same station. Be good to each other.